Hello, everyone. My name is Harry Clarke. I'm Senior Commercial Analyst with Avinode Group. And today I'm going to talk through the very interesting topic of how you can supercharge your business with profit optimization. So, what are we going to speak about? Well, we're going to start off with what is profit optimization versus revenue management, which is the more typical term usually used. We're going to talk about where to start doing this, and we're going to talk about ways to optimize as well. And throughout all of this, we're going to be talking, kind of information from various different industries. We're not just going to restrict ourselves to private aviation itself. And I think it's an interesting topic, primarily for operators, obviously. Setting the right price is incredibly important. Also for brokers or anyone who's just interested in better understanding what the price is going to be that they are offered. So let's start off. Why revenue management? Why is it that we call the topic of pricing a charter flight revenue management? Well, of course, it came from our big brother, commercial aviation. Various airlines, once upon a time, airlines just set fixed prices and things like that, and then they slowly worked out how they were going to optimize their revenue. But is that actually, what we're doing in charter? Well, let's put ourselves in the shoes of a revenue management analyst at a commercial airline. What is it they're actually doing? Well, they are trying to sell seats on a fixed flight. A flight is scheduled, maybe to LA, 8 a.m. in 2 months' time. At that point, that flight is definitely going to happen. If they don't sell the seats on that flight within the next 2-month period and the flight takes off, then those seats have essentially gone off. They're not going to make any money from those. It's just like if you were to buy a melon or an apple or a banana at the greengrocers. After a certain amount of time, that is going to go off and it's going to spoil. If you haven't sold it by that point, you've not made any money. The key thing is because the flight is already scheduled a long time in advance, the costs have already kind of been incurred. They're fixed costs. If they don't sell any seats, they're still going to incur the same amount of costs, roughly, as if they sell all the seats. So the revenue management analyst at the airline doesn't actually think about costs at all. I spent a long time working in revenue management for a commercial airline, and at no point did we bother thinking about the costs. We didn't really think about profit at all. Now, I don't think that is what a charter sales executive in our industry is actually doing. They're doing something else. They're thinking of lots of other things as well. So they're thinking about demand and supply. They're thinking about the impact of a flight on the rest of the schedule. They're thinking about empty legs. And crucially, they're thinking about costs. They're thinking about, if I did this flight, how much money would I make? They're thinking about the profit. They're thinking about what they should do. They're thinking about whether to schedule the flight at all. That's a very different thing. And I think that should be referred to as profit optimization. So, why is this important? Well, this is some data from another industry entirely. This is from the B2B SaaS industry. And this is data from a company called Profitwell in Boston. And they measured various different companies that they have on their platform and looked at how did they grow most effectively. So they looked at companies which grew by acquisition. Imagine that's companies who get more customers for their private jets. And they didn't grow by very much, the companies that focused on that. They looked at companies which focused on retention, companies which were trying to make sure that their customers didn't churn. A bit better, but still not as good as the best one, which is the companies which focused on monetization. Those companies which focused on making as much money as possible from the assets that they already had. So I think if we were to think about that in terms of our industry, that would be the companies which focused on optimizing the price for any given flight rather than just trying to sell more flights. They're going to make more money on a per flight basis. Where can you start? Well, this is from another industry as well. This is from the world of AI, machine learning, all that jazz. And this is a quote from Andrew Ng, and he says, if your boss asks you, tell them that I said, build a unified data warehouse. Why is it that you need a unified data warehouse? It's because you're going to need some historical data. you're going to want to put all this information into your data warehouse. You are going to be thinking about bookings. You're going to be thinking about which charter sales executive is selling the flight. You're going to be thinking about price. You're going to be thinking about date, which customer you're selling it to, which event it is for. And all of these things, if you bring them all into one place so they're not siloed, then you're going to be able to start analyze it and start to better understand the pricing that you can offer. You know, in a big company, then you can have a data warehouse. It can be very, it can all very tech-centric, everything like that. But so long as you're gathering it somewhere in one place, then an analyst can work on this information and start to make decisions. Why is it we care about the history? I thought we were trying to work out what's going to happen in the future, what price you're going to be doing in the future. This is what people often ask is, we want a prediction data, we want the future. Well, unless you're looking at the history, you're not going to be able to work out what is going to happen in the future. So this is an example of a self-drive car. It didn't just get out of bed that day and decide to drive around a track, right? It's been trained through machine learning with lots and lots of data, so it knows how to take on future turns. And it's the same with profit optimization. You're going to have to analyze the past to be able to do things in the future. So now I just wanted to talk a bit about a couple of quick wins, I guess, in my eyes, in the world of profit optimization. So this chart is just random curve. Might not be the reality of things, but it's representative. And on the x-axis, we've got the price that a flight is offered for charter at. On the y-axis, we've got the willingness to pay of the client. So as you can see, we've got a cost of operation of the flight is a certain amount of money. And then we've got a price, and this operator is deciding that they're going to offer a fixed price for every single customer who wants to fly this route. They've chosen the price which most often matches the customer's willingness to pay. And when that normal flight comes in, normal levels of demand, normal levels of supply, then it's the right price. They're going to win the trip, and it's fixed, and everyone's happy. But what if something else happens? What if actually there's not much demand, and there's loads of supply, and the market conditions change? Well, if that happens, then the customer's willingness to pay is going to drop an awful lot. If you're offering a fixed price, then you're going to miss out on that trip entirely, because they're not going to pay your fixed price. And when the opposite happens, and the customer's willingness to pay is extremely high, it's less probable, but it happens. If that happens and you're offering a fixed price, then you're going to win the trip because you're cheap in that situation. But there's a lot of revenue that you've missed out on in that situation as well. And the other tip I just wanted to share is I don't think this is no rocket science. This is very simple stuff. This is just if you had a trip crisscrossing the United States, say it was based out of Seattle, then you had another aircraft become available, then it makes perfect sense to switch the routing to the Las Vegas-based aircraft rather than the Seattle-based aircraft. You're going to make a lot more money that way. You're going to lower your costs. I think this is, every operator is doing this to some degree or another, but often on a very manual basis, kind of looking through the lines of the schedule and trying to see where the opportunities lie. Imagine if you could do this just with a simple computer program, press a button, and it re-optimizes your entire schedule for all your aircraft. That's going to be really quite powerful, and you're going to save a lot more money. So that's everything I wanted to talk through today. So thank you very much for listening.